Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for the market recap video for the week of, well, the day of Monday, September 7th, 2015. Even though the stock market was closed today, we still had a couple markets open. We had the dollar market, which is the currency market. We also had the commodities market, which was open up for a short time. It was also closed for a little bit today. But despite the fact that the market wasn't open, you know, guys, I never miss a market recap video. So I'm going to go ahead and do it anyways, kind of as a prep video, as well as kind of just a couple different things on my mind as well. Well, this week in the marketplace, we're sitting in the market where basically we're in no man's land right now. You're right in the middle between support and resistance in the market. Obviously, we're still in a bearish downtrend right now. We want to carry a bearish delta right now, bearish portfolios. That doesn't mean we don't have bullish trades, ladies and gentlemen. It just means we need some bearish trades out there as well. As you can see, we got a lower low. We still have a lower lower high, and as long as we have this lower low and this lower high, that's a bearish downtrend. Now it's on a daily chart, which is a short-term trend. If you want to switch it out to a weekly chart, all of a sudden you will get a different perspective. And as you can see, you have broken down, and you're currently setting as support, major support right around 1900 to 1885 in the marketplace. Even if you wanted to say intermediate is neutral, the short-term is bearish, that will give you a short-term negative bias of a slightly bearish bias, which is basically what your portfolio needs to match right now in terms of the marketplace. If you just want, we use a concept called delta weighting, where we basically combine the net delta in our portfolio to tell us the directional bias of the market. However, if you want to just even look at a ratio of the trades out there, if you have 10 trades out there, you need some bearish trades. You need 4, 5, 6 different bearish trades out there to offset your negative delta. I do see a little bit of downward pressure on the market as well, just given the fact that we've had to sell, and I do expect some volatility this week in the market, given the fact that we're approaching the Fed on the 17th of this month. I'll have a lot more to say about that next week in the market recap. But also we've had Monday off in the stock market. The Chinese market went up 8-9% today, and then crashed that exact same level back down to about negative 3%. When you're looking at the futures market, which we're looking at right now, you've had a little bit of an uptick since Friday, where you kind of finished the low at about 1910. It's currently at 1936, with the closing price on Friday at right around 1917. Obviously, as you can see, nothing's been happening today in the market. It's been really slow, and I don't expect that to really kind of change until perhaps later on tonight when the European markets open, or more than likely into tomorrow when the U.S. equities markets open up, and we have 3 days of price action that I expect to be priced in, which I do expect some volatility in the markets tomorrow. Now, in terms of the dollar index, same thing here on the dollar index. Really nothing to see here today in terms of the dollar. Nothing really happening. Even though the dollar was open today to trade, it's not exactly like it's going to do much at all. So pretty much just flatline today on the dollar index. And then crude oil coming off the recent highs of 49.33. Crude oil is probably the one instrument out of the futures that really kind of moved today. Crude down, already crude's down 3% today, and the market's not even open. It's in a short-term bearish downtrend in terms of the intraday. This is a 30-minute chart, and as you can see, lower lows, lower highs, lower lows, lower highs, punching down around 44.76 right now currently. If you switch this out to a daily chart, you're looking at holding that level right here. Like I said last week, guys, nothing's going to surprise any one of us in crude oil. It's very volatile. Only the strong survive, or the crazy, I should say, or the people that don't care about volatility trade in the crude market. But which basically equates to myself, Gino, Tim, Noah, and the rest of the coaches at Tackle. We like a little crazy every now and then. But at this point, we do have a short-term downtrend. The volatility here does make me a little nervous. got some downward pressure on here. If you put a gun to my head, I would say I would pick the short side on crude right now. But it's maybe 51-49% in that type of probability, and that is even taking into account -3 on the political polling scale. So give or take in terms of that capacity. So nothing really happening in the market today outside of crude coming down a little bit, 3% on the downside. So I wanted to talk a little bit today about finding trades. I'm currently mentoring an individual by the name of Jessica Marinho, and we have been talking the last, especially yesterday. Today we spent the day really just kind of trading, getting ready to make some trades tomorrow. Spent a lot of time on technical analysis, kind of Elliott wave theory, Fibonacci, targeting, stop loss placement. We probably prepped, I don't know, honestly probably 30 35 different trades out there, and just I'm very very proud in terms of what she's doing. The speed of how she's kind of going through the analysis has been nothing short of absolutely impressive. But I wanted to talk in terms of, before we got into that prepping stage of the trades, you have to find a trade to prep. And we were talking about stocks, we were talking about commodities, we're talking about currencies, and we ended up building 4 lists. We built a bullish list, we built a bearish list, we built a commodity list, we built a forex list. Now the commodity list and the forex list is always going to be really easy because there's only so many of those. We got the commodity list, our watch list from Tim and his commodities report, both in terms of looking at both the commodity, the futures commodity, as well as the ETF version of that commodity that we'll start practicing trading on. We got the forex list just in terms of building major pairs versus cross pairs. We got those lists, but the biggest problem, or I shouldn't say problem, it's not a problem, but the biggest hurdle is to cut through all of the noise of the stock market. Because even if you're going to trade options, you got to cut through the noise. Now that is a good thing as a trader, because you have so many, all pun intended, options. You have probably around 7,000 stocks in the market that you could trade. Not all of them are very liquid, and not all of them have liquid options, but at the same time, that gives you a lot of ammunition that you can go find the best one, whereas in the commodities and the currency market, you really got to wait for that to set up. And so, I was talking to Jessica about the different ways that you can go about building a watch list and using this watch list to find and make money off of. And we built a bullish list and we built a bearish list. Now, in terms of the bullish list, we talked about 4 different ways you can potentially find a trade. The first way I talked to her about is value investing. And what value investing is the Warren Buffett school of investing, the getting out there and trading things trading companies you like, and so on and so forth. And that didn't get us very far because there was a lot of these high-end private fashion companies, shoe companies that are not publicly traded. So we quickly went on to fundamentalist, and we looked at 2 different fundamentalists out there. We looked at the IBD Top 50, which is a growth-based list, which wasn't very helpful in any capacity. Even when we found potential bullish trades, as you can see here, we found, we're looking at Paycom Software Incorporated, still a bullish uptrend, not very volatile. We really liked that, but then we're like, okay, well, we still got to check the option liquidity, and as you can see on the call side, we have 2 volume. The bid is 155, the ask is 215, 42 on the open interest, 0, 0, 0, 0 on the put side, very wide bid-ask spreads. And that's the problem with the IBD Top 50, is it doesn't really have liquid options on it. So whenever you even find a potential trade, it's very hard to protect the investment with the protect to put option. It's hard to write covered calls on it because of the liquidity. And I can't tell you how many stocks we found, like Umbrella company, that is M formation, getting absolutely slaughtered. High end of 130, current price $73. I mean, you're talking already not only in bearish territory, you're talking getting it what handed to you. And that's going to happen to growth-based lists that have extremely high P ratios. I mean, if you track back in 08, 09, the IBD Top 50 was down about 20%. Worse than the S&P 500. The average IBD stock that was in the market then was about 68% clipped versus the S&P 500, which is about 48% clipped. So that's not going to be a great list in a bear market. It's going to be a great list in a bull market. It's one of the best lists in the bull market. It's one of the absolute worst lists in a bear market, so it's obviously not going to be performing very good right now. And then we looked at the upcoming edition of the Tackle 25, which we have teased everybody for the last month and a half on, which is still a work in progress, as me and the rest of the coaches have are just kind of finishing the final touches on it. It's taken a little bit of time to really put forth that list, because when we want to put it out there, we want to put it out there in terms of a pure system, instead of just thinking about the covered calls that we personally like to trade. And even in that list, we were looking at about 80 stocks on the list that are made the secondary cut on the list. Of the 80 stocks, you're probably talking about half of them that are in current neutral trends. So of the 40 that are in either a bullish uptrend or a bearish downtrend, you're talking about probably 20 that are bullish and 20 that are bearish right now. And so even that list was very, very, it was helpful, but at the same time, it was, there's only 20 of the 80 stocks that were bullish, and there's only 40 of the 80 stocks that were neutral, which you can still do covered calls and naked puts on that. So we added about 10 stocks that we felt comfortable to our watch list, based on those fundamental lists. And then we looked at heat maps, and we were looking at these heat maps over there, and we found probably 10, 15, 20 stocks based on heat maps. And so basically we went to the trade center here, clicked on heat maps, and as this is going up, heat maps can be really, really, really helpful for a variety of different purposes. But what we did was we kind of just looked at the different trends in terms of those line graphs, and we're like, okay, so Yahoo, Ori and bearish downtrend, let's add that to the bearish list. Trip, bearish downtrend, let's add that to the list. Microsoft, we just kind of went through the line graphs on all the different S&P 500 companies, and honestly speaking, heat maps can be one of the fastest ways in under 60 seconds to analyze every stock in the S&P 500. And we found maybe 10, 15, 20 stocks that way off of heat maps that we could potentially go look at either from a bullish standpoint or a bearish standpoint. And then we ran technical scans, and that was the most fruitful way that we really found potential trades was these technical scans. And in the end, in my estimation, we found some of the best stocks to potentially make trades on this week in the market, both in terms of the bear side, the bull side, and whatnot. And sometimes it takes that type of work to find potential trades out there, to find potential trades in the bull side, in the bear side. And now we have a different list that we can work on. So at the end of it, it took us about 2 hours total to run through all of the different prepping and scanning and researching, P ratios and trends, the intermediate trends, short-term trends. But we at the end of that 2-hour segment, and this was yesterday, we found right around 24 bullish stocks that are some of the better stocks in the market, and then just some of my favorite covered call stocks as well. And then we found honestly speaking, we had to turn down as many bearish stocks as we found, and we found about 51 great liquid options, liquid stocks in terms of the bearish list. And then we found right around 18 commodities to add to the list, and about 14 cross pairs and major pairs, and that's how we built our watch list. And tomorrow we're going to start building the most powerful list out there, and that is the Theta watch list, the cash flow watch list. This has been Matt Justice for Tackle Trading, bringing you the market recap for Monday, September 7th. Obviously, we didn't have a lot to talk about the market, so I more than less wanted to talk more about how to build a watch list. Had a great day mentoring today, and looking forward to another day tomorrow. Happy hunting in the market tomorrow. Expect some volatility. I do not expect a lot of economic reports this week. We only really have consumer sentiment out there. But one last thing in terms of the economic reports out there, I will show you some of the research that we also did in the market yesterday and last night, is basically how economic reports impact the markets. And I would strongly encourage you to go over to Tackle Trading to identify how economic reports impacted the market. Jessica did some absolutely wonderful research on every economic report from August on how it impacted the financial markets, the S&P 500 and the dollar index 1 hour after, from the time of the release to the 1 hour after the release. And we found a couple different things out here. Currencies are more correlated than to economic reports in the stock market. That is something I already knew, but watching Jessica go through the work and seeing her come to those conclusions is very, very powerful. Despite what the Fed says, inflation not that important last month. The CPI report came in at a negative last month. It only impacted the market by $2.50 and the dollar by 14 cents. That was one of the least powerful economic reports last month. And then the PPI report, which is the producer price index, only impacted at $2 in the S&P 500 and 19 cents. Even combined, that was these. If you combine those two, is still some of the lowest moving economic reports last week. Labor, manufacturing, and GDP were the most important economic reports. Bad news is good news, and good news is bad news only when it applies to labor market, consumer behavior, and retail. Great work, Jessica, on the research, building scans, making trades, and here's to another day of mentoring tomorrow, and maybe I'll recap what we're doing tomorrow as well. Matt Justice, Tackle Trading. Get the game changer life one trade at a time. Over there at tackletrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.